Right, hello everyone. Just an update from us on markets across the course of this week. Normally we'll start with the calendar. We'll have a look at the calendar, but in fairness, this calendar this week has not provided us with too many opportunities or any clear direction across markets. Markets have been more focused on a number of speeches that we've had out this week, and just generally what markets are doing, kind of intermarket relationships and stuff like that. So flicking through the calendar, we can see a bunch of things or after things, pieces of data that the markets really just have not paid a great deal of attention to. The ECB's forum on central banking, really Wednesday was probably the main focus of the day, with Christine Lagarde, Andrew Bailey and Jerome Powell, the president of the ECB, governor of the Bank of England and the chair of the Fed, all speaking at the same time at this forum. Now, they all spoke about inflation, about how inflation is strong, we know that, and have to raise interest rates to get that under control. But the interesting thing for me is probably the slightly differing paths that these central banks are on. You look at the Fed, the Fed hiking interest rates aggressively multiple times, 75 basis points at the last meeting. Jerome Powell did open up the door for 75 basis points at the next meeting, which is probably likely now. And the other two, Christine Lagarde, spoke a lot about raising rates and, hiking interest rates, throughout a number of her speeches over the last weeks and months. But again, still to come to fruition, we are expecting a 25 basis point hike at the next meeting, at next month, out of the ECB. But the ECB are in a little bit of a different position, a little bit of a tricky position, because America just have America to think about. Bank of England do have the UK, which is 4 countries, which is a little bit different. But you got the Eurozone then, which they've got so many countries they got to look after. And one thing that we did get out of the ECB this week was how they're going to use their funds from or how they're going to reinvest their funds from their pandemic-related, monetary stimulus programs. And mentioned a number of countries that are going to be recipients of some of that money. But then you think about the ECB. The ECB are in a bit of a difficult situation, because on one hand you've got inflation in say a country like Spain, which is above 10%, but then you look at inflation in somewhere like France, which is below 6%. Nearly half of what it is in Spain. So different countries will have different opinions on that sort of stuff, in terms of aggressively raising interest rates to get inflation under control. In some countries, say if you need 5 rate hikes to get something under control in one country, but you need 2 or 3 rate hikes to get it under control in another country, the country with 2 or 3 rate hikes is potentially going to be hiked into recession, when they weren't, when the economy wasn't growing as fast as some others. So very difficult position to be in terms of the ECB. I think they may have some political problems going forward with these countries over the back end of this year, and that will be very interesting going forward to see how high they raise interest rates. But with that situation that I just mentioned, it does prove slightly tricky. The Bank of England's Governor Bailey, they are approaching peak hawkishness, you would have to imagine, at the Bank of England, with the stagflation situation in the UK that is going to continue into the back end of this year. That is not likely to prove an environment where they're going to massively raise interest rates, and it's likely to see the pound from here on out remain slightly under pressure. But we'll have to see. We do need the charts to react to that. If we have an opinion for a bias lower, we do also need our charts to agree with that, in order to give us not a bit of confirmation to get into any position. So flicking across to the charts then, having a quick look at the charts, we can see here the dollar it's had a couple of updates this week. It has made an attempt higher. It's a bit of a move higher, but I think we are still struggling around this big monthly resistance level, this big orange level. If I just blow this chart up just for a second, back here, the level where I was talking about for ages, we slightly broke it, in terms of the June candlestick. This is actually already swapped over in terms of the July candlestick on TradingView, which I didn't actually know, but anyways, think it'd wait till it actually swapped over the months. But you can see the US dollar again struggling at those highs back there. You can see, and I think any breakthrough through this, we'll get rid of that box. I think any breakthrough sort of a high like this would be significant for us going forward. I think we would need to see that for to be confident of some trend continuation. You look over at euro dollar and the problems that surround the euro and the Fed hiking interest rates still more than the DCB and further than they're likely to finish. So I still think euro dollar does remain pressured. It still remains at this big support level, going back at 105, 104. Any break below this, would correlate with a break above in the dollar index, which you could easily see this thing back at parity very quickly if we were to breach that level. There's clearly no buying off it here. We made an attempt off at one time up to here and only got to this point. Made an attempt off it a second time, only got to this point. This third time, if we can only get to something like there, I know it's getting a bit messy, here, but something like that is definitely potentially on the cards. We come across the sterling as well, and sterling does also remain a bit pressured. The chart looks pretty similar, and again, you're just printing lower highs and lower lows. This downtrend has continued, longer term downtrend. With the Bank of England probably struggling to get any more hawkish, or a lot more hawkish than they already are. That has not resulted in cable strength. The dollar has taken priority, and you would imagine a break through these lows does seem likely at some point. Apart from that, you've got dollar yen again with the Bank of Japan reluctant to adjust monetary policy at any point in the near future. They've reiterated their stance that they don't believe that they should change. Remains to be seen how long that lasts. If they do remove that anchor on the 10-year yield and yields soar in Japan and they cannot keep that under control, that is likely to be something that sees dollar yen melt to the downside. That's likely to send the Japanese yen through the roof. But until that happens, we cannot act on any of that information. We are still grinding higher. Does look like a bit of a double top here, but we are coming into a long weekend, so maybe a bit of position squaring into the long weekend could also be a reason for that. But 140 doesn't seem an unreasonable target in the short term, unless the Bank of Japan go and change anything. Apart from that, though, I think stocks the main focus of attention. I think stocks is, again, we've continued this move lower over the course of this week. We did have a bit of a bounce back into the close last week, but that has just been met with 4 days of selling, 4 down days over the course of this week. Again, we had a pretty healthy retracement. We had a retracement back to our Fibonacci level, retesting this previous lower low back here, this kind of region. Good kind of region in the chart to look for re-engagement to the downside, and that did then play out over the course of this week. Stocks still remain pressured with an over the top hawkish, well, not over the top hawkish Fed, but certainly a hawkish Fed, and then all the situation around the world with the inflation pressures and growing risks of a global recession and a global economic slowdown. Again, keeping pressure on stocks. So when does this downtrend end? I mean, there will come a point in the future where it is a good idea to buy stocks again, and you go piling back in and hopefully get a leg lower. But these charts, if you just look at it for what it is, it's a clear technical downtrend, clear lower highs and lower lows, and we haven't really seen anything significant on the higher time frame to say change that. So for now, I think stay short on stocks, but that can easily change in an instance if we fail to make a new low and then start to move higher. So definitely something worth keeping an eye on going forward into next week. As we speak about next week, into next week, have a quick look at the calendar. Into next week, Monday will be the 4th of July. It will be a bank holiday in America, so bond markets and stock markets in America will be closed on Monday. Bond markets will shut up shop early today, 2 p.m. Eastern time. Stock markets are to go through to the close this evening and will be shut on Monday. So we might get some position squaring over the course of this afternoon. We have also had some position squaring over the course of yesterday and today, probably with the month end rebalancing. We have got also quarter end rebalancing and half year end rebalancing as well. Can definitely give us some wild price action over the course of this week, really, but over the course of today and yesterday can definitely cause us some issues, as it's quite difficult to predict where those moves are going to go. Into the calendar of next week, though, after Monday, we got balance of trade on Monday out of Germany. Again, markets are likely to be a bit lower in liquidity, even across European session. You'd have to imagine some people in Europe will be slightly hesitant to go piling in. We've got the RBA again. Then we're expecting another interest rate hike out of the RBA, 5:30 on Tuesday morning. 50 basis point rate hike is to be expected. This will be a third consecutive rate hike and will be the first in a long time will be the first triple consecutive rate hike in a long time in Australia. We then again Wednesday we got the FOMC. We got the FOMC on Wednesday. Get some non-manufacturing PMIs and some jobs figures out over the course of the week. But the minutes on Wednesday will give us a good indication as to what the members thought at the last meeting and potentially how they feel going forward. Apart from that, though, onto Friday, non-farm payrolls, 1:30 on Friday, second Friday this month. Today being the first, and then the bank holiday weekend over the weekend means that NFP is next week instead of this week. But we will cross that bridge when it comes to it. So going forward into next week, I think the dollar and the Australian dollar will definitely be in focus. We'll have to see what happens over the course of the week, but definitely keep an eye on the calendar, see what's going on, keep an eye on the charts, cross asset correlations, and we will see how that plays out. Again, be a little bit careful on Monday. Don't go crazy Monday morning. Be a little bit careful. Tuesday might end up being the Monday of next week. But apart from that, then, that is it from us then, folks. If you're celebrating Independence Day in America, enjoy, have a good weekend, enjoy a long weekend. For us though, we'll be back on Monday for another week of trading, and I'll be back next week for another weekly market insights. Thank you.